Good morning to everyone. So I'm Catherine Collin. I'm heading the European Investment Bank representation for East Africa, based here in Nairobi. European Investment Bank, for those who don't know the institution, is the Bank of the European Union. We are owned by the 28 member states of the European Union. We exist.
Does that include Britain?
It does.
And what are you going to do about that?
I said, shall I make the joke or not? So you made it for me. Unfortunately, unfortunately 27, but in any case, so we've been in existence for as long as the European Union has been in existence, because we were set up by the treaty that founded Europe. We operate globally. Across 160 countries. I mean, last year, lending volume was 56 billion euro globally, with about 8 billion outside the European Union, and about over 3 billion on the African continent. I mean, our activity cover lending. It's essentially, we are a lending institution, long-term financing for infrastructure, energy, transport, water and sanitation, ICT, urban development as well as support to small and medium enterprise on an intermediate basis through financial institutions, as well as equity investment. So we cover quite a wide range of activity across all sectors.
Excellent, great, thank you very much. And then Ghislaine Develon, is that pronounced correctly?
Not at all, but we are not very far. No, I don't blame you. This is very difficult. It's a French name. It's Guillain.
Guillain.
But I've heard that more than 40 years in my life. No problem with that. So Guillain, yeah, I'm French. I'm the country director of AFD, French Development Agency, Agence Française de Développement. Basically, we are the same as EIB, but smaller. But the difference, if you want, is that we are a bilateral development institution representing French government and France. But we are doing the same job, working on the same sectors, and we do not have the same figures, but we are not global. We are working specifically in Africa, in Latin America, and in Asia. AFD has been present in Kenya for more than 20 years, in all Africa for many, many years. It's not a contest, but we have probably the same age as the EIB. We were created in 1941 during the World War II, and our mandate has a little bit changed and evolved. We're also very present in. We are a bank, so we are a lender, development lender, present in the same sector that the one Catherine mentioned, pointed out. So infrastructure, energy, biodiversity, obviously, environment. We are also on water and sanitation. And affordable housing is a new venture for us, but we have some good experience in Africa, and we do have some experience also to share with French organizations that we try to associate to our projects and our loans in our operations.
Great stuff, thank you. Johan.
I think the clock just ticked right after 12, so good afternoon, everyone. My name is Tahani Mahlaule. I'm an investment manager and business development manager with International Housing Solutions. Previously to this, I was an investment manager, deal maker in South Africa, where we were structuring affordable housing transactions in the South African market. So just a bit of context in terms of the background to IHS. So IHS is a private equity organization. We are involved in the structuring, delivery, and long-term and mid to long-term management of affordable housing. Over the years, we have started 3 to 4 different funds, 3 in South Africa, 1 in Sub-Saharan Africa, and by Sub-Saharan Africa really being Namibia and Botswana. The investors that we have are mainly DFIs, pension funds, and some other private capital. Over the years, we've raised about $570 million, which is solely dedicated to investing into affordable housing. And what that basically means is that we partner with developers in the delivery of affordable housing. The main model which we are sort of well known for is the rental model, in which instance we manage affordable housing rental over a midterm period, and where we would be off-takers to developers. We work very, very closely with developers in actually structuring these type of developments. We have done so in South Africa. We've catalyzed the market quite significantly. We've been first movers in different aspects of it, such as the IFC EDGE green standards. So we were the first on the continent to actually deliver a green affordable housing. I think we've got somebody from the Green Building Council here, CN. So I think she can just correct me if I'm wrong on that, but we've basically been very instrumental in catalyzing different markets. We are now looking to enter the Kenyan market, and we think that the fund will be established prior to the end of the year. And effectively, we'll be doing the same strategy that we've done in South Africa, in which we will partner with developers in delivering affordable housing for rental purposes, and at a very small aspect of it, include developments for sale to the open market. And because we've got unique products such as the tenant purchase scheme in Kenya, we will be adopting that at a relatively smaller scale in the fund as well. But we do believe that long-term rental is actually the way to go.
Great stuff. Thank you very much. Godfrey, would you give us an introduction to yourself and your...
Good afternoon. My name is Godfrey Tapela, as he has mentioned. I work for IFC. IFC is the private sector arm of the World Bank. I think, as you know, the World Bank was formed, its acronym is IBRD, which is International Bank of Reconstruction and Development, formed basically to rebuild Europe after the World War. There was a realization down the line that you needed an entity that focused on the private sector, because the government alone cannot, deliver what an economy needs. So we play a specific role in terms of, being private sector focused, being commercial, and in a way that complements whatever, the IBRD is doing. So we have two distinct mandates. We've got the same shareholders, we work globally, and IFC's focus really is, we're DFI, just like my other colleagues have mentioned, and we provide long-term funding, and we play across different products, from debt to equity and in between. We also, specialized in different sectors, basically across most sectors, as I would say, but with three main pillars, where you've got infrastructure, which involves anything from your ports, toll roads, the big infra projects, mining, and then you have what we call the financial institutions group that work with banks providing credit lines, etc. And then I sit in a unit which is called manufacturing, agribusiness and services, which is really the bucket that fits all the other sectors that you don't have in the other two. In my specific focus, I'm focused on East Africa, is across, housing, tourism, retail, and commercial property investments. So housing is a strategic, sector for IFC and the World Bank, and the way that we view it really is, housing is a no-brainer as a business in terms of the fact that you've got the supply-demand gap, but the reason why we're all sitting here is because no one has cracked that nut in terms of delivering housing at scale. Largely because there's a lot of risks embedded in the sector, some of which have been alluded to here. So I think it's a good opportunity to share ideas, to see how we can partner to unlock the space. It is a space that requires a different mindset, because affordable
Great, Godfrey.
housing...
I think that was a wonderful introduction. We are getting to the rest of that now. Thank you. Okay, Catherine, I'm going to open up with you, because I think you probably brought millions and millions and millions of euros, and you've been investing in Europe for a period of time. You've identified Africa. You have invested in parts of Africa. Maybe you want to tell us, because there's a lot of investors, developers out there that probably want to know, how's this thing going to work? We've got a financier here. Are you targeting affordable housing? So a few questions. You're coming here to invest. What is it that you're looking for? Partners, what is the requirements? You want to maybe elaborate a little bit on that?
Okay, yes, thank you. I think being a European institution, I mean, we are actively involved in the housing segment in the European Union. But interestingly enough, we actually operate only in 11 out of the 28 countries in the European Union. And the main reason being that we need a very strong regulatory framework to be able to operate. And I think that's a kind of a lesson that one can also learn for Africa, is that, you know, one could think that it's all hunky-dory and very smooth in the European Union, but actually it's not so obvious.
Yes.
So I think that's maybe one element that I would bring to the discussion, that the importance of the regulatory framework and making sure that it is in place. And when we talk about housing, I mean, looking now at what we do outside the European Union, we have a mandate that is given to us by our member states, our shareholders, and in these countries the mandate is very much about poverty reduction, poverty alleviation, and so as part of our urban lending policy, we feel that we can contribute to this objective of poverty reduction by tackling affordable housing. But we need to have a clear definition. What do we understand by low cost or affordable housing? Who qualifies? Who is eligible? How can those qualifying access this type of housing? We usually look only at rental models, not sales models.
Right.
That's another important element.
So own to rent.
Yes,
yeah.
Exactly. So, and then we also need to make sure that the rental rates are actually correctly positioned towards market rates. So that means we will not go into something which is market rates for rentals, And I think the key criteria are essentially urban regeneration, but that does not apply so much in these countries, because we're talking there about renovating old, worn out urban area. But social inclusion, very much relevant in the countries here, making sure that all citizens, whatever gender, ethnicity, age, is able to play their part in the urban development. Climate action, EIB sees itself as the climate bank of the European Union, and therefore climate action ranks very high. And I think this type of activity is very prone to contributing tremendously to the climate action agenda. Community resilience, very important as well. And finally, smart technology and smart development, using technology to develop smart cities.
In Nairobi, we'll say that Nairobi is a very transitory market. For the most part, people would love the opportunity to own a home, but from that aspect, it usually happens in the towns where they originally are from. And it wouldn't necessarily be that that owning a house in Nairobi is mainly the most important thing. Of course, that actually does obviously differ across different aspects, and that's why our fund offers a bit of variability in terms of rental products, and to a certain extent, the rent-to-buy model and the direct-for-sale model. So what is
your mandate for ROI? I mean, this is a bank. I mean, banks want to get their money back and they get a return. Catherine mentioned.
Sure.
There's a social aspect. So what do you expect it to return?
Sure. Obviously, from a returns perspective, it differs across different markets. Wouldn't actually be able to give you an exact sort of figure as is, but obviously you'd have to look at the dynamics within a particular market, where the government bonds are, where the bank lending rate is, what sort of yields you're actually getting in the market, and the kind of escalations that you can actually attract. And given that, you end up at certain parameters from an IRR perspective and a multiple perspective, return on equity. That's the sort of parameters that you'd actually look at. South Africa is different to Namibia, Namibia is different to Kenya, but you sort of take all those sort of aspects into account, and you and of course, you look at the impact perspective. So our investors, the IFC, there's a commercial aspect to it, but then there's also a large impact perspective to it. With KFW, KFW and IFC, we managed to look at new ways of actually improving the market, right? So we looked at climate-friendly, energy-efficient housing by being the first adopters of the IFC Edge Green Standard. In Namibia, we will be greening all the units that we're doing. In Kenya, we will be greening every single unit that we're doing. So from a carbon footprint perspective and from a end user perspective, there's a lot of the savings are actually transferred to the end users. So there's a whole lot of different impact sort of driven initiatives that you'd have to assess in line with the commercial aspect of it. So it's a combination of both.
Okay, excellent. Gilon, let's talk Kenya, because you're based locally. What is it? Are you only investing here, affordable sector in Kenya? Maybe just tell us a little bit about what you're doing here in terms of what you're looking for, what's the criteria?
Right. Actually, we are not doing any affordable housing in Kenya. It's too bad you asked me this question, because otherwise, in some other countries in Africa, we do. But anyway, no, we are in Kenya, and there are a lot of promising potential. This morning, the PS explained what the policy is. The policy support is huge. The momentum and the impetus is huge. So we have to use of this momentum, both development partners, as we are here, and also operators and developers. For this scheme to work, they need all the stakeholders involved. They need DPs, development partners. We need the policies, the government to instill some subsidies, and they are doing that. And we need strong stakeholders denominated like with a task to provide this affordable housing. Here, we used to have NHC, which is a corporation that was in charge of developing the affordable housing. And now the NHDF fund has been established, and it has a specific mandate. On top of that, it's one in the banner as well. KMRC, has been very recently established, and is usually promoted, usually supported by some development bankers like World Bank, some of us, to develop the refinancing mortgages industry. So first, there is a strong policy, a strong framework, a regulatory framework. I top up a little bit I add up a little bit what Catherine said, is much of the essence. We need to have this regulatory framework in place for us to intervene. Not that we are looking for a return on what we are doing, but we are making sure that funding from taxpayers somehow from France or Europe or wherever you are talking to needs to be soundly invested. So regulatory framework first, then a strong politics impetus, which is done here, and some stakeholders which are already very designed and denominated and tasked, properly tasked for the job. So we have all these ingredients in Kenya, and some of us are already working with NHC, with NHDF, either in equity or in lending, and some of us are working or will be working with the KMRC with the same aim, trying to work on a manner which would provide affordable housing with inclusiveness goal, meaning to try and develop an urban development program when we talk about affordable housing. So this is a little bit boring what I'm telling you, but this is what we are looking at.
Finance is boring.
Yeah, this is, and we are approaching lunchtime, so I don't want people to doze off.
No, we're gonna get the crowd to engage, and they're gonna. I'm sure there's gonna be some engaging questions coming from the audience there. Okay, great. Thanks, Gilon. Godfrey, where's the untapped market potential? I know you were talking about East Africa. What are you looking for? You need a mic there, Godfrey.
I mean, with housing, I think the potential is everywhere. But the issue is how do you tap into that? Supply and demand is an obvious gap because the population is growing all the time. you can never, I think, get into a situation where you've got more houses than people. So I mean, there's a business case there. But when you unpeel the onion, I mean, there's several challenges. I think if you look at what Kesia presented here in terms of the value chain, starting right from the beginning of the value chain in terms of land, there are a lot of issues around, titling, around, the land use, etc., the cost of land. I mean, if you look at Kenya, for example, I mean, the cost of land is actually quite high. And, to have a bankable and affordable project, you need the land cost to be a reasonable percentage of the total cost. And then there are other aspects, you talk of infrastructure, the regulatory framework, if you're talking of rentals, for example, is there a rental policy that allows for that market to thrive? And then on the other end of the scale, you've got the offtake. I mean, you have to build houses knowing that there will be a take up. I think there was a mention of a project in Rwanda which had issues and the price had to be reduced. I mean, similar to what you mentioned earlier about Angola. I mean, the government had a very ambitious program, and I think they used their oil revenues to try and benefit the community, but without realizing that at the end of the day, the output or the end product was too costly for the targeted market. So the market research that was needed upfront was done at the tail end. And then when they delivered there's this Kilamba Kiaxio, they call it KK, which has been in the papers for the wrong reasons. But what the government quickly realized afterwards was that, they have delivered something way above market. So they changed the model and reduced the prices and came up with a tenant purchase scheme, which resulted in that project being fully occupied. So I think there is a space for TPS, there is space for all these products. That's why for us, I mean, within IFC, we also we leverage the World Bank, being our mother body was, I mean, within that context, because they're investing in KMRC, for example, to unlock the end user financing so that you've got long-term funding from that perspective.
Great, thank you very much. I want to open up to the audience. I'm sure there's questions out there. We've got a question up front here from the gentleman. Just put up your hand, please, sir. And I need a mic runner, somebody who can bring a microphone up front over here. But you could please give us your name, your company, and then just tell us who you're directing the question to.
Okay. Do I speak into this?
Yeah.
Hi, I'm Ken Gibson. I represent DB Schenker. I've been here for 23 years now, and really happy to see the Minister this morning talking the way that he was talking, which is a departure from the past. It seems to be full of energy and enthusiasm. And it should be, because I've been here for 23 years and we've been talking about affordable housing for 23 years. I think, in my humble opinion, and I asked my wife about this, and she was born here, and she said, there's no such thing as affordable housing to buy, because the people it's designed for, they can't afford. So it's really encouraging to see that the conversation is moving towards affordable renting of houses. And I think that's the point I'd like to make.
Okay, great, thank you. On to the left-hand side there. Thank you.
Good afternoon. My name is Aki Taquinho Scirocco. I am from Nigeria. My question is to Mr. Godfrey. I happen to be in the property development sector, and I am chair a company on pension. I am looking at the circumstances of a worker in my country who contributes pension fund, who builds resources. Now we have about 8 trillion as pension deposits. What benefits that a worker who contributes that pension funds that grow daily, how does he benefits in a process of having a housing that he rents that can ultimately own and can easily transfer his pension deposits at the retirement age to compensate for his contributions and rental of that house. What I mean here is, how can we guarantee his ownership through his continuous deposits?
Could I ask you just to direct the question, and then, because it is a Q&A. So your question is, just repeat, to who? Yeah. Do you want to respond?
I'm not an expert in terms of what he's talking about, but what I can basically say, where I sit, we finance developers in the delivery of houses. And if you're talking of a situation where, there is a company that has got, workers that need housing, one way around that is to structure a project through which a developer can provide houses to the employees of that company where it is assured of an offtake, and work out the mechanisms in terms of the TPS scheme where there are experts that can do that.
Okay, excellent, great. Question over there from the other gentleman there, and just give us your name and who you could I also ask you just to keep the questions short, because it is a Q&A, and then just direct it to who the question is. Okay, thank you.
My name is Mustafa Ali. I am a developer across about 8 African countries. Now, my question goes across the board in the panel. I can summarize that you are all financiers. Now, can you give us practical examples where you have financed a developer? Because I think really the problem here is about the developers, supplying. Developers, one, and then probably two also on the offtake. We want practical examples here.
That's a great question. Who's willing to take that? You want to take it up, Armani?
Yeah, sure. So basically, the whole conversation is really around the supply side and obviously the demand side. From the demand side, you could be looking at open market demand, where you effectively are selling units on a trickle sale to multiple individual homeowners. We partner with developers from that aspect as well. In the instance where IHS would actually engage with you in designing a product which is fit for the affordable housing market, and we would actually inject equity into that project. So it has happened in different ways where a developer can actually just act as a developer, or the alternative is that the developer can contribute the land into the JV, and we will then put the equity, inject the equity to actually develop. So we don't actually do direct financing. We're not lenders. We are equity providers and long-term owners and managers of affordable housing. The other aspect that we have done, in the South African market, we currently operate about 9,000 rental units. We have about 4 projects in Namibia that are coming on stream and 2 that are coming on stream in Botswana. The model that we actually used there was the turnkey model. It effectively means that we would engage in terms of designing a product which is suitable for a particular area and for the rental market. So IHS will be the off-taker. We will then obviously engage with you to actually purchase the development at works completion. So you could actually look at that as an opportunity to actually leverage either the full development. So in an instance where you have 500 units that you'd like to develop, the 250 units that IHS would be willing to buy could be seen as a full-on pre-sale. And from that aspect as well, we actually can take the houses in the development in phases. So we structure something which can actually help you be able to better leverage the project and your balance sheet as well.
I think he also wants to look at what is some practical examples. I mean, do you have something practical? Does anybody want to add to that? Catherine, maybe? You just want to, from your perspective, the financier?
Yeah, I'm not sure I will be able to give you what I know. As I said, our experience on the African continent is relatively recent. The whole matter is on how to structure the financing and how the risk allocation will happen. So Now, whether I could say yes, we can finance directly a developer, I am not sure, because so far we've done it more on an intermediate basis. As I said, it was the case in South Africa.
Yeah.
It was the case in Northern Africa as well. So maybe I can't give you a practical example where we have provided financing directly to a developer.
But that would be track record, surely track record of the developer.
Yeah, I mean that would be if it's on a corporate basis. Well, then it depends on the track records, on the balance sheet and the future cash flow. But it could be structured as well as a PPP. Then it would be an SPV where we would rely on the cash flow and rely on sorts of comfort and risk allocation. So it really depends on the project by project basis.
Okay, great.
Small word maybe on South Africa still. It is easier for us to work with intermediation like with banks. We provide a line of credit to banks who in turn have a bigger leverage on operators and developers. But one just example in South Africa, I think this is a private one, Africa Housing Company. We have provided a direct loan of 15 million euros, 12 years, so quite a long maturity one, to support 2 communal housing projects with some concessionality embedded. So it answers some kind of eligibility criteria in terms of environmental and social, in terms of inclusiveness and urban development. But this is possible. Obviously, the most easiest way for us is to go indirectly through a line of credits to banks, be it public or private, or we go to the delegated body or public delegated body which is tasked with this urban development program. But we can do, and we do in some countries, direct lending to private operators.
And I'm going to put the question here to the panel because related to that other gentleman's question, there's surely the cost of land from the state. I mean, because we've seen a lot of stuff in South Africa, for example, some of the land was given away for free with the developer creating housing. Is that an option? Is it, I mean, you know, that could be a way of reducing the cost quite significantly. And it's all about unlocking land and really sort of, I mean, the other unique thing is developers are now, they have to do 20% in South Africa has to go to inclusionary housing for a development that could be in a CBD, for example. But what happens to the value of the property, that kind of stuff, because they're trying to get everybody to get away from driving 40 kilometers, 60 kilometers from where they live and they're in the CBDs. So maybe cost is, and maybe Godfrey, you want to chat to that in terms of governments, in terms of, can they maybe be a little bit more flexible in terms of cost of land?
Yeah, I think, I mean, the reality, we are not saying the government should give out land for free. I mean, land is a finite resource, but there are mechanisms around making housing affordable by addressing that cost, the high cost element, in terms of doing a lease, for example, or a PPP scheme where there is a private developer that us as a fund I can lend, because we don't lend to the government. So I mean, I think there can be creative ways around that to make for the affordability.
And government get the taxes. They get the taxes.
Yes, exactly.
Yeah, get the municipal, Excellent. Great. Is there any more there's a question over there. I'm going to take 2 more. I'm going to take that gentleman and that one over there, the other gentleman, and then we have to conclude.
Hi, my name is Anand Suchak. I'm from a company called Polycare. We build, we have a product for building affordable houses. This question is really very much for Thane. In Namibia, when you talk about affordable housing, what would be really interesting for me to understand is what is the price of an affordable house? And the other one is, on the rents that you are expecting the tenants to pay, what sort of returns are you expecting?
Okay, sure. So in terms from a pricing perspective, we average about 550,000 Namibian dollars. So from that perspective, I think that's the pricing that we're really looking at. It's slightly lower than the South African market. And sorry, the second question was? So from a rental perspective, we're looking at a investment over a 5 to 7 year perspective. So we would acquire at a yield of say 9 to 9.5%. That's in Namibia. And based on the rental escalations that we're getting, which would be anything like around CPI, so you're effectively looking at 6 to 7%. So going in, you would be looking at about a 16%, but then the actual uptake would then be on the exit. So depending on who you actually exit to, whether it be the pension funds, whether it be on a trickle sale basis, or whether it be actually taking a portfolio and listing it onto a stock exchange, would actually then depend where you actually end up in terms of the IRR in total. But if you want us to have like that discussion afterwards, I'm more than happy to actually get
great stuff. I think that's what it's
detail.
all about. I'm going to take one last question just before we come. Oh, there's two there. Okay, I'm going to take the first, this gentleman in the middle, and then the very last one at the back. Just put up your hand. Where's the mic runner? Sorry, where's the mic runner? Sorry, this side over here. Excuse me, that one, that gentleman over there. Sorry, sir, we put up the hands just now. I have to give priority to that gentleman in the middle there. What we can do afterwards, unfortunately, just for time, we're going to have to engage individually with the panel. So I have to be conscious of time. I'd like you all to be. I'll come back to you, sir. Yes.
Hi, my name is Adnan Savani. I'm a real estate developer here in Kenya. The company is called Developing Africa Limited. So we are aspiring to get into affordable housing, and I'm personally very passionate about green building. So this question is directed to Mr. Tahani. Does IHS provide any recommendations for green technologies that have proven to work well, both environmentally and financially, in projects that you have done in the past, and that you can provide or recommend to real estate developers such as myself?
Yeah, sure. You do have varying platforms that you could actually use. I mean, some people talk about Green Star. There's one called LEED. We have adopted the IFC Edge standard, and basically the interventions are looking at 3 separate interventions, which is energy being electricity, water saving, and embodied energy being your materials. So it's a really simple tool where it's really easy to actually adopt. A lot of your professional teams would really just need like a single training. You would obviously then engage with either SGS or the Kenya Green Building Council in actually adopting that for your particular projects, but then it would look at a 20% saving across the board. We have used that in SA, and we're currently sitting on about 7,000 units that should be coming on stream in that South African market, doing exactly the same thing in Namibia, have been engaging with SGS and Kenya Green Building Council in South Africa. So I'm also, again, happy to talk to you afterwards.
Yes,
and
I
actually
think let's do that. I'm going to take one I'm just going to take the gentleman right at the back. Sorry, I'm going to have to discut it. We just have to be conscious of time here. Last question, and then please engage afterwards with the panel. We've got a break. Our lunch break is after the next presentation. Yes, sir.
My name is Bharat Merchant. I am from India and associated with the India Home Loan Limited, BSc NSE listed housing finance company. India has been the most successful in housing finance. So my question to all the panel speaker today is that a lot of finance is available. Pension fund gives finance, but only question today in India and Africa is devaluation. There are only 2 solutions. Number 1 is either this fund should come in local currency, African currency, so there is no devaluation risk, or either African government should give subsidy for this, then only this finance problem will be solved. Please.
Okay, anybody want to have a crack at that? Yeah, in terms of the currency? Yeah, I think you just got to press it. Yeah, Catherine?
Maybe I can just mention one thing. I mean, in our case, when we do it on an intermediate basis, we are in most instances able to provide local currency, or at least take the forex risk. So I mean, there are options, that there are ways to look into the local currency financing. And I think at the European level, I mean, through the blending, there are increasingly more focus put on local currency, and it's not only for housing, there are other sectors where this applies as well, and to see and find innovative mechanism to be able, by combining some grants and loans, to kind of cover and deliver in local currency.
Absolutely. We want to talk about the FLISP subsidy in South Africa, the finance-linked individual subsidy.
in terms of the the FLIS subsidy.
Yeah.
So in SA, there's a whole lot of different government
Grants.
sort of grants and initiative that
Yeah.
we actually use. So FLISP in particular is when you sell units to the open market, the government does give a subsidy on a sliding scale. So obviously the lower you earn, the greater the subsidy that you actually would attract. And that actually would actually then subsidize people from actually purchasing houses. But you've got a whole number of other programs as well that are adopted in that market, like the social housing initiative, where government actually gives you a grant to develop, and you in turn have to charge a capped rental on your products.